Hey everybody, Ethan here. I am so excited to show you some of the tools I built for Nashville's housing market. I'm going to share some of them with you and some insight, even Wilson County for you, Carlos. But I'm also going to hit some other areas in Tennessee just so you can see what the dynamics are happening. Because let's be honest, you may feel like it's a seller's market or you may feel like it's a buyer's market, depending on not just where you are, but in what price category you're in. I mean, there is a price category that actually had a 50% increase, 50% increase in active listings, and you're never going to believe where it is. I'm willing to bet you this will shock you. So let's get into the data, and then you guys leave your comments, leave your questions, tell me what you want to see. With that being said, let's get into the data. Now, first things first, mortgage rates have been going up for the past 6 weeks. It's been unbelievable. But interestingly enough, John Authors says that the 10-year Treasury yield is now right back where it was before the turmoil in August. Coincidentally, also, Trump's chances of winning the election are also back. And he says that they're related. I think they actually are related. And I'm going to do a video on this. I cannot wait to do it because we need to do a deep dive on what is happening. There's a massive mortgage rate risk. Do not bet on interest rates when you're buying a house. Buy a house that you can afford at the current mortgage rate. Lock in your rate for a really long time, preferably 30 in my opinion, but whatever, just lock it in. Lock in your price, lock in your payment. Yes, taxes and insurance could go up. And yes, that's a risk, but not nearly in Tennessee as much as it is in some other areas. You cannot predict mortgage rates, especially real estate people. Real estate people cannot predict mortgage rates. The Atlanta Fed, by the way, came out with this affordability tracker. Nationally, we're in historically unaffordable territory. It's really bad when you look at Nashville. So the index is 71, but for Nashville, it's even worse. It's at 65. It's at 65. It's so unaffordable, not for the people moving into Tennessee, by the way, but for the people that live in Tennessee, it's unaffordable. So if we continue to get that migration, in theory, it'll eventually go back up to affordability because eventually the incomes that are being imported into Tennessee will make up the difference. This is like mass scale gentrification. That's really what it is. It's just what it is. I don't know what else to say. Let's keep going. By the way, this is my website. I'm building. I'm so excited about it. I'm building it. I've got a really cool new tool on here, but let's look at the real-time price tracker really quick. You can see the two leading indicators. The blue line is price cuts as a percentage of active listings. And the red line is contracts. Contracts are scorching hot. They're now up to 505. That tells me that we're probably going to see, we're at 480 right now for October. We're probably going to lock in a 485 for October. And believe it or not, November could end up being in the 490s. Now, the truth is this really is much less relevant to you as an individual looking to buy because I'll be honest with you, a lot of this has been push and pull by mix. There has been upward pressure on a lot of neighborhoods, but a lot of that's just because sellers have been holding on as inventory accumulates in those neighborhoods. I'll show you an example and a smoking hot deal here in just a minute. I'm really excited about it. But let's keep going. Let's keep going. Check this out. So this is my national map using Realtor.com data, and I'm comparing 2024 to 2019. Now, what makes this so cool? There are 7 states with active listings that are higher than pre-pandemic. We got Florida, Tennessee, Texas, Colorado, Utah, Arizona, and Idaho. Okay, all pre-pandemic inventory higher. Now, when you see that, you think, oh my gosh, Tennessee must be about to crash. It's got 10% more pre-pandemic inventory. Guys, that pre-pandemic inventory is really only in 3 or 4 counties, okay? Sevier, Davidson, Montgomery, which is Clarksville, and Memphis. Outside of that, a lot of cities in Nashville, Chattanooga, the Tri-Cities, that's Johnson City, Kingsport, Bristol, Franklin. These are popular cities in Tennessee that have lower pre-pandemic inventory. In fact, some of them really aren't that growing. Williamson being one of the strongest. Look at Williamson active inventory. It's really not growing anymore, guys. It's really not growing. Now, I did do pending listings. We'll talk about this in a little bit, but the truth is this is wrong, okay? I thought it was my data. It's not my data. Realtor.com actually screwed up the pending listings for RealTrack's MLS. I think it's the way they do the MLS import because it's not in some of the other MLSs. In fact, let's just look at a couple others. Look at Severe. Let's look at Severe real quick. Severe 1,600 compared to going back to 2016. It was 15. Okay, but look at demand. Demand's actually flat. It's not down. It's like flat pre-pandemic. Of course, according to Realtor.com, we know that's a little bit questionable, but this to me, if there's any place that's going to crash, it's Severe. Okay, Severe is going to crash. It's part of the Airbnb bust, but we've covered that before. We're not going to cover that again. But compare that to Knox. Knox right next door, 1,200 listings, almost double where they were last year. But look at contract volume. Contract volume has been pretty strong, but it's actually kind of flat, and it's about 30% down from where it was pre-pandemic. So Knoxville's kind of one to watch because Knoxville has been scorching hot. It looks to me like these dynamics are so tight you probably wouldn't be able to notice, but it's something to take note of. If I'm in Knox and inventory almost doubled in a year, I'm going to be very patient and I'm going to be watching, because if it does that again next year, we could be in a very different market. So I'm watching Knox. Knox has been scorching hot with prices, and it's honestly a great place. So pre-pandemic though, not back to pre-pandemic. Now let's look at Wilson, because I promised you guys I would look at Wilson. Carlos, this is for you. 677 active listings. It's a new high for the year and really, post-pandemic high. And we're still a little bit below where we were in 2019. And when you look at contract volume is about where it was pre-pandemic. Okay, 179, 196, okay, 235. Now we're at 190, 147 last year. Now this 376, again, I think they doubled it. I think it's 180, whatever 376 divided by 2 is. I don't know why they doubled it, just the way they imported it this time. Hopefully they'll get that fixed. The point is though, is that Wilson's a very stable county. And when you compare it to Davidson, Wilson, Williamson, these are strong counties. Now look at Davidson. Davidson has more inventory than it had in 2016. That's a yellow flag. It's a caution flag. Contract volume is still pretty weak compared to what it was in 2022 and really pre-pandemic. And so Davidson is to me a warning sign. And I have a feeling this is all related to Airbnb. If I'm being honest, I think it's all related to Airbnb. The reason why is because Severe, Airbnb, largest Airbnb in Tennessee. Davidson is also one of the largest. I think it's number 2. And Memphis is number 3. And you can see that's where the inventory is skyrocketing. Kind of wonder if Airbnb is having an impact. Very interesting. Now, let's take a look at active listings here. This is all of Middle Tennessee, or the 9 counties surrounding Nashville. And you can see we actually peaked on October 13th. I actually think that was a peak, and it's all downhill from here. When we end this month, we're going to have a lot of cancellations and expirations. I don't think they're going to bounce back. I could be wrong, but at this point, I don't think they're going to bounce back. Of course, the election day, it's going to be very interesting. Let's look at contract volume. We look at contract volume. We're still up. We're up 2180 compared to 1915. Let's just say 280 because I can't do simple math in my head. 265 listings up from where we were last year. And here's what's crazy about that. When you look at contract volume by county, Rutherford is up almost 90 listings. Williamson is up almost 90 listings. 2/3 of the increase is from 2 counties, Rutherford and Williamson. So demand is stronger, much stronger in Rutherford and Williamson right now. Demand is stronger. Look at Davidson. Davidson is only up 11 contracts. Davidson's barely up. So Davidson's basically flat. They have the most inventory. There's no reason Davidson shouldn't be a gangbusters on contract volume unless there's something brewing under the hood. I would say if you're in Davidson, be very cautious. But if you're in Williamson, contract volume is now up 36% year over year. That is fascinating to watch. Will it change? Of course it could. But right now, we're not seeing any lower demand than we saw really a month ago. So pretty wild that it's been so stable and so strong. No drop off yet. This really has to do with price point. I want to show you 2 price points that I think are very interesting. This is under 300,000, guys. So this is active listings under 300,000. They are at 692 compared to last year. They were at 465. This is a 50% increase in a $300,000 below house. $300,000 is almost half the median price of a house. And so this is wild to see a 50% increase in sub $300,000 houses. When you compare that to contract volume, I'm just going to show you the contract. This is a ratio of active to contract. You can see it's up at 2.66 compared to last year. It was at 1.6. So it's up. Yeah, it's almost double. Wild. Let's go Williamson over a million. Okay, Williamson over a million. You can see active listings 687 compared to 640 compared to 556. So you can see active listings have been growing year over year over year. You might think, oh, well, they're growing. That means there's going to be a crash in $1 million Williamson houses. Anybody hunting for $1 million house in Williamson knows that is not the case. There's more competition now than there's ever been. You can see that by the contract volume up 157. This is as of October 12th, but 157 compared to the year before, 133. So it's up, what is that, 20? I mean, that's like almost 20%. I don't have the math in my head, but it's almost 20%. It's up, while active listings are only up 687 to 644. This is single digits. When you compare the ratio, active to contract, we're actually lower than where we were last year at this time. And it's not really changing. We haven't had that volatile drop off in contract volume like we did last year. It's unfortunate. I love it when competition disappears. It makes it so much fun to try to buy. It's not happening right now. It's very competitive, or still competitive, in the $1 million space. One deal I wanted to talk to you about, south of Nashville, south of Franklin, right off of 840, there's a neighborhood called Falls Grove. Okay, it's right here. The Grove over here, you got these $2 to $4 million houses. Falls Grove is a little bit less expensive. It's down here. And you can see there's 6 houses for sale. But check this out, guys. This one right here. In fact, you know what? Before we do that, this is my neighborhood tracker. I'm going to pull up Falls Grove so we can just get a quick glance at how active listings are compared to contracts in the past. And you can see active listings, we got 6 in the neighborhood. It was at 8 earlier this year. It's at 6 right now, but nothing under contract. Nothing under contract. 4 of those 6 have cut their price. So to me, 2/3 have cut their price. Nothing under contract. Great opportunity. Let's look at price. We scatter plot everything that's closed. We can see there's kind of 2 price bands in this neighborhood. There's over 300. These are going to be for the smaller houses. Over 300 per foot, peaking out at 338, but as low as 307. And then for the larger houses, to 230 to 265. Okay, so if I'm looking here, I know where my price points are in the past year. I know where they were the year before that. I'm going to be pushing on price compared to that. But there's one house that I'm particularly excited about. It's this one right here. Guys, this house, if you're looking for a house under $1 million in Williamson County, this is the best deal there is right now. It's got a 2.25% mortgage rate that you could pick up. It's got a balance of 525. So you need $350,000 down. Now you say, oh, but I don't want to put $350 down. You can get a fixed rate equity line from a bank. Ascend is offering one for 8%. Do the blended rate. It's still only going to be like 4 or 5% instead of 6.5 to 7.5%. So it's still a massive savings. Even if you did the blended rate, you're still probably going to save $10,000 a year on interest. I am going to be adding an agent ranking tool as well. So even if you're in an area that I don't specifically cover, or it's far out and you feel like, oh, Ethan can't help me with this. If you'll reach out, I've got an agent ranking tool that not only plots all the sales that a agent has made, but it actually compares the list price to the sales price. So you can see agents that are working on behalf of buyers to get a lower price. And I have scored them. So I've scored them, believe it or not, I'm not number one. These are really interesting ways to get an idea of how aggressive a buyer agent can be on your behalf to get a lower price. So if you're not in my area particularly, or you feel like I can't help you, still reach out. I'll connect you with that agent. That certainly supports the channel because I can refer you and get compensated for that as well. And you will get an agent that doesn't just do high volume in that area, but actually has a proven track record of getting lower sales prices for their buyers. So love to help you there. And with that, I hope you guys have a great rest of the day, and I will see you next Saturday.